Thursday, the third day in the month of August. Good morning and welcome to Business Morning. Because it's 10 a.m., it's time for Business Morning, which is 55 minutes of current and relevant business conversation. I'm Ini John Mekwa, bringing you this program for today. Now, let's start off right with what's going on in the commodity space. Chicago wheat futures slid on Thursday to a 3-week low as expectations of strong exports from Russia eased some of the concerns arising from attacks on a Ukrainian port. Soybeans fell for a second session, while the corn lost more ground as pressure from crop-friendly weather in the United States Midwest weighed on prices. Corn gave up 0.6% at $4.97 for 3/4 of a bushel. Soybeans also gave up half of a cent to $13.20 for 3/4 of a bushel. The drone attacks destroyed buildings in the port of Ismail and halted ships as they prepared to arrive there to load with Ukrainian grain in defiance of a de facto blockade Russia reimposed in mid-July. However, expectations of strong exports from Russia, which is the world's biggest supplier, weighed on prices. Russian President Vladimir Putin told Turkish counterpart Tayyip Erdogan that Moscow was ready to return to the Black Sea grain deal as soon as the West met its obligations regarding Russia's own grain export. And we know that this has been in conversations for a while now. Malaysian palm oil futures eased on Thursday, declining for a 7th session in 8 as they tracked losses in rival oils, although a weaker ringgit capped losses. The benchmark palm oil contract for October delivery on the Bursa Malaysia Derivatives Exchange slid 22 ringgit to 3,893 ringgit. That's about $855.23 a metric ton. India's edible oil imports in July rose to a record 1.76 million metric tons as refiners built up stocks for upcoming festivals, given uncertainty over supplies from the Black Sea deal. The ringgit, palm, which is palm's currency of trade, fell 0.3% against the dollar, making the commodity cheaper for buyers holding foreign currency. Russia attacked Ukraine's main inland port across the Danube River from Romania, and that happened on Wednesday, sending global food prices higher as it ramped up its use of force to prevent Ukraine from exporting grain. Dalian's most active soy oil contract eased 0.3%, while its palm oil contract fell 0.6%. Soy oil prices on the Chicago Board of Trade were down 0.4%. And then crude oil now prices were a little changed on Thursday after a 2-day decline, including a sharp drop on Wednesday as the U.S. government credit downgrade weighed on sentiment. The concerns around supply tightness provided some support to that. Ratings agency Fitch downgraded the main U.S. credit ratings, the world's biggest oil consumer, reflecting an expected fiscal deterioration as well as a high and growing government debt burden. Despite the broader bearish sentiment, prices are being supported by concerns of tightening supply because of output cuts by major producers that are expected to be kept in place, and that's going to be in a meeting on Friday, tomorrow. Brent crude futures were at $83.23 a barrel, added 6 cents, that's 0.1%, while U.S. West Texas Intermediate crude added 5 cents, and that's 0.1% to $79.54 a barrel. Both benchmarks were trading near their highest since April, but closed down 2% after the ratings downgrade. WTI prices also rose nearly 16% in July, while Brent gained more than 14%. The supply situation was highlighted by a record 17 million barrel drop in the U.S. crude stockpiles last week, as refiners stepped up runs and export topped 5 million barrels per day, and that's according to data from the Energy Information Administration. Well, we come to Nigeria now, where we see the need to engage technology in deepening the penetration of Takaful insurance model in Africa. It was the crux of the matter at the African Takaful Non-Interest Finance Conference, which was in Lagos by Noor Takaful Insurance Limited. Speakers, including the 14th Emir of Kano, Mohammed Sanusi, the second implored industry players to leverage the offerings of modern-day tools to expand the horizon of the Takaful insurance policy.
It's the African Takaful and non-interest finance event happening in Lagos, Nigeria, and players from the non-conventional insurance industry are gathered. The essence is to find ways of deepening the Takaful non-interest finance culture, leveraging technology in Africa.
Our decision to organize an annual conference underscores our commitment to deepen what is a nascent industry. There is also the fundamental need to safeguard fairness in the financial systems, which is usually taken for granted while never quite assured in supposedly modern democratic economies.
Special guest is the 14th Emir of Kano, Mohammed Sanusi II. He is of the opinion that the resolve to use technology to drive the Takaful plan is quite apt.
In Islamic law, there's always a distinction between what is called wasila and gaya. Wasila is just a means. And the means themselves don't have any implication in themselves. So long as your products are in compliance with Sharia, the technology that you use is permissible, so long as the products themselves are permissible.
The National Insurance Commission shows its presence, as well as other experts and industry leaders.
We have a great opportunity to go down and to serve the bottom of the population pyramid, but to serve the bottom of population pyramid, actually, we need to have a new products and to use technology.
Driving this conference is New Takaful Insurance Limited, and the management says with them, it's a win-win situation.
As a participant in a Takaful policy or plan, you get better treatment, you get faster claims payments, you get to enjoy equity and fairness. More importantly, you also get surplus when you don't make a claim at the end of your policy year.
The conference is one of the many ways New Takaful Insurance is demonstrating its resolve to keep changing the narrative in the insurance business, alongside several other products on offer.
And now we go to the commodities space now to see what's happening there. We heard about oil there trading above $80. That's for Brent, and that's exactly what concerns Nigeria. We have to have this conversation with us, Oluwatomi Maiwa, senior analyst with financial derivatives company, joins us virtually from Victoria Island. Hi, Oluwatomi, thank you for your time.
Hello, good morning, Hini.
Yeah,
Thank you for having me.
Great. So in the midst of all the subsidy removal and non-removal and palliatives and all of that, we've seen some, looking at the earnings, we've seen some oil companies, MRS, Eternal Oil, doing well. Obviously, the hike in price has been of benefit to them. Now we see Brent is up again, even though global crude oil prices is always so volatile. It's up 0.64%. We see Brent trading above $83. This should seep back into Nigeria, but what kind of reaction or what kind of impact can we expect in Nigeria?
Thank you very much again. But let me start by saying that why we're actually seeing that increase in Brent price, although we saw it decline recently. This morning, investors were actually skeptical about the U.S. Downgrade, and so we saw that investors were sort of looking at the market, and we saw that bearish sentiment in the market. But in the near to long term, prices of crude oil will actually remain high, above $80 per barrel. And why are we going to see that? Because the supply, the oil market is actually tight. There's a tight supply, considering the increased cuts that we've seen from the OPEC Plus, and most likely we might see Saudi Arabia extend its 1 million barrel a day cuts into September again, as it has promised. So all of these are actually leading to a lower supply in the market. And considering the fact that the global economy is actually now recovering, don't forget that IMF actually revised the global GDP growth. So it's saying that there's been the problem of inflation has been most central banks are now beginning to begin to bring inflation closer to their target. And so there's going to be an improved demand. So that is actually going to keep oil prices high, even in the short to long term. Bringing it back to Nigeria, first of all, definitely that means external earnings will increase for Nigeria, especially considering the fact that now that our exchange rate is now reflecting the market rate, so the earnings for the government will actually increase once it's brought into Nigeria. But considering that the market, the fuel subsidy has been reduced, we will see that it will actually the price of the local price of of fuel will actually increase, considering the global price has actually increased. So all of that will lead to higher fuel prices in the near to medium term. So that significantly, we've seen the price of fuel increase from about an average of 532 to about 617, which is actually disturbing for many industries in Nigeria. And considering the fact that there's been high inflationary pressures before, and all of this coming into play, it's actually going to reduce disposable income for most industries. But it could also be a good thing for the oil industries in Nigeria, even though we've seen declined demand in oil, in fuel consumption, considering the fact that people can no longer deal with that increase in the price of fuel.
So a couple of things you said there, but one that sticks out, of course, that Nigerians will not want to hear is the possibility of another increase in petrol prices.
Yeah,
but unfortunately, it's a deregulated market now. That means it's supposed to reflect the global
prices.
Exactly.
Very correct. Very correct. So
Because,
it's very sad, but then we just have to take it like that.
Yeah, but I had a conversation close to this with Mr. Ruwani, who is the Chief Executive Officer, of your company, FDC, and he said that subsidy has not totally been eliminated. Because if not, then now that Brent is at $83, more than $83, perhaps we should expect a spillover into the petrol prices. And right now, we had Labour lead a protest nationwide yesterday, still talking about the hike that we have. If we were to add another one, I do not know how this country will be like.
Well, I'll say for now, we might not see that immediate increase reflect. Why? Because most industries would have stocked up their inventory. They would have had to buy down, and that would be what would be sold out for some period before they will now begin to reflect global prices. So basically, I think it has to do with what's once you are able to convince the Nigerian citizens of what the government is about, what they intend to use the money for, to boost aggregate demand in the economy. So probably if we are seeing more measures from the government to be able to resuscitate the economy, probably we might see less pushbacks from the citizens. So I think that side has to be very clear. The government must come, although we've seen that the 500 billion that the president actually announced palliative, but that is still small. The magnitude of it is actually very little. It's just about 0.5% of total GDP. We need nothing less than about 5% of total GDP, probably 10 trillion, to be able to feel the impact of the palliative. And then what is going to be the structure? How is it going to be disbursed in a manner that will be efficiently used? Most of these programs end up being futile, because it ends up in the hands of people who don't need it, or probably use it for something else. So the structure, the institutional framework through which that palliative will be implemented must be very, very clear. So that is one way. So I think, like we've always been saying, that we do not just need policy changes. We also need the institutional reform to ensure that all of this reform, come, into will actually stabilize the economy. So we need policy change policy change, and then we also need institutional reform. That will actually bring about a stabilized growth in the economy. So I think that's the way forward for now.
All right, so I'm talking of the way forward. I guess commodities prices are reacting to all of this hike and inflation
Definitely.
and all of that.
Yes. So basically, we are saying in Nigeria, seeing prices actually increased in all, especially for food. We are still saying that price surge because although because of the increase in transportation cost, and then the naira, it's actually depreciating, but has actually stayed it in few days. But then we saw it depreciate from about 800 to 800 to about now trading about 875 now. So looking at wheat prices, the price of wheat has actually increased globally, and also in Nigeria, we've seen it's actually turned into flour. So we've seen that that increase in price actually filter into the price of flour. And considering the fact that the import duty has been adjusted to about 775 naira per dollar, all of these things are actually filtering into the price of flour. So basically, all prices have increased. We have the semo, we have those end products or processed products from flour are actually increasing. So looking at spaghetti and all of that, so it's actually filtering into prices, especially food prices, and because food is a necessity, right? So the ability for the consumers will have no choice than to take it in, even though there can be alternatives that people would actually have to switch to. But compared to other commodities that are not necessities, it will be hard for them to filter and to pass their cost to consumers. But for food, we'll see that reflect more.
Yeah, well, imagine if we did not have to import wheat or flour, and all of that. Imagine what would have been happening to the naira at this time. But we'll leave that to our imagination at this time until we can bring it to come to pass. Oluwatobi Mayo, our senior analyst at Financial Derivatives Company. Thank you so much for your time.
Thank you very much for having me.
Let's take a break now. When we come back, instant payment solutions. How is it going with you on your phone, on your devices? We'll talk about that in a moment here on Business Morning. Stay with us. Welcome back. Still watching Business Morning here on Channels Television. Now, data released by the Nigeria Interbank Settlement Systems says that transactions worth 38.9 trillion naira were performed electronically in November through the NIBS instant payment platform. And on this shows that it's the highest monthly transaction record on the platform. Although we did have some disruption, remember the cash crunch issue, and then the unexpected increase in demand on some of those infrastructure, and there were a lot of failed transactions and disrupted transactions. But let's talk about the cost of those transactions and the cost of fraudulent activities on those platforms with Mr. Akinwale Goodluck. He's the Deputy Chief Executive Officer of African Nenda. He's here in the studio. Good to see you, Mr. Goodluck. Thank you for your time.
Thank you very much. Thank you for having me.
Yeah, so after that cash crunch and, the huge demand that led to a lot of failed or aborted transactions, would you say there's been a change? Have they learned from the lesson of that period? Talking about instant payments and all of that.
Well, I think the controversy and the issues, that came off the back of the currency swap have catalyzed instant payments. It has opened a new vista for people in Nigeria to understand, appreciate, adopt, and begin to use instant payment systems. The NIPS platform is a very, very good instant payment system. Yes, it was challenged as a result of the huge jump in demand at the time, but by and large, I think that NIPS is doing quite well. And
so you would say we are in a good place now?
Yes, I would say that we are in a good place. NIPS it's a very, very good system. It's one of about 40 instant payment systems in Africa, and it's one of the more progressive ones in terms of ticking the boxes around cost efficiency, very good redress mechanisms, even though there's still a bit of work that can be done in that area. It's instant, gives a good user experience, enjoys a lot of trust from the community. It's secure, and it's very easy to scale. So
Is
it
this
ticks
just
the
for
boxes.
NIPS or the industry generally?
Well, the NIPS is the premier payment system for Nigeria. NIPS is owned by the commercial banks and the central bank, but NIPS is the scheme operator, the scheme owner, etc.
So you talked about cost efficiency. Do consumers even know how much they are charged these days for those transactions?
Well, I think, the issue of cost is a two-pronged issue. First of all, you have to make instant payments cost not more than cash. So for a lot of people, that's a big differentiator. If you want instant payments to trend and you want people to adopt it and grow usage, then the cost of using instant payments
Millions
must
of
not be
people.
more than cash. Now, secondly, a lot of payment systems and NIPS also gives you a fair amount of visibility and transparency around your costs. So very often you see that you get a transaction notice telling you this is going to cost you XYZ or this costs you XYZ. So there's visibility. If you look at one of the primary considerations for very good payment systems, it must be low cost, particularly when you're trying to drive low value, high volume type payments, then cost is really critical.
What about security?
Security is good. What has happened in the world is that those who operate in the real world, the criminals, the fraudsters, have moved online. You can never have enough security, but there's a lot of work to be done around security, both in terms of, one, security has a big impact on confidence. And if people lose confidence in the payment system, then the payment system is in trouble. So with security, you then look at security before the payment, at the payment stage, and after the payment. There's a lot of education to be done. There's a big role for all stakeholders in terms of addressing security. Security must also take cognizance of the level of financial sophistication in the market, and more importantly, the level of digital and financial literacy.
When you say there's a lot of education to be made, like what do you think people do not already know, or what are some of those things or tips, that I think our viewers watching should be conscious of when you talk about security and instant payments?
Well, I think, if you look at the world today, there are not too many types of fraud. One is when you sort of initiate the payment yourself as a result of what we call social engineering fraud. That's where someone has sent you a message and you have acted on that message, that fraudulent message, and have actually initiated the transfer yourself. Another aspect is where, for instance, there's been a breach of data and somebody's able to initiate or take over, for instance, your SIM, and then initiate a transaction on your behalf. What we need is a lot more education. We also need for, payment systems to be a lot clearer in terms of redress. In a lot of markets, the principles around fraud stipulate that, look, once it's a fraudulent transaction, irrespective of how it was initiated, there is no liability for the user. And, if you are doing that, you must also take time to ensure that the redress is affordable, is quick, and it's not challenging for our people to use.
So sometimes I've heard of situations where these kind of things happen, and it's a data-driven world that we're living in. So we expect, for instance, our financial institutions should have our data, our communication, they could even trace the calls made and things like that. So when a fraudulent activity takes place on someone's account, maybe the person initiated it, or sometimes maybe not. All this ATM on phones. A lot of people expect that the financial institution should be able to give information that can lead to the arrest of the criminal individual. But we don't hear a lot of that in this country.
I think there's a lot of work going on behind the scenes. So among the mobile network operators, the banks, the central bank. There's actually a lot of work streams addressing fraud. The issue is that for instant payment systems, it's two things. The money is sent instantly, and very often, 99% of the time, is irrevocable. So the damage has been done. The user is typically not really interested in ensuring that somebody is arrested. What is important for the user is, how do I get my money back?
But if you get the criminal arrested, you could get your money back.
Yeah.
By chance.
By chance. But I think sometimes...
it just gives you that satisfaction that something has been done. The criminal is arrested. Even if you do not recover all of your money or your money, but you know that the system is doing something, about your plight.
Yes, I think the system, NIPS and, indeed most payment systems have very robust fraud prevention and, fraud recourses. One problem typically is the amount of fraud. Also, we see that, users are often led by social engineering to make mistakes. So I keep harping on the point of capacity building, digital literacy, financial literacy, and anything that sounds or looks too good to be true, it's not. It's too...
Yeah, I always say that too. But you also have the situation where phones are stolen, ATMs are stolen, or at the point, gunpoint, people are forced. At the ATM, that's instant payment. You also have cameras there. It's supposed to be for security, but I don't know. Does it work?
I think those things work, but the beauty of instant payment systems is people want their money immediately. So systems are customized to deliver that service, and a system will deliver that service irrespective of who is accessing it, provided that that person has come with the right ID, the right passwords, knows the OTPs, etc. But what then typically happens is that systems also have a lot of built-in fraud detection and monitoring processes. So if you see a certain kind of transaction being replicated over and over within the same time frame, it can trigger a warning.
But it hasn't been. You've had people say, oh, maybe their phones were taken or something, and they used it, and they used it for recharge card a couple of times. It wasn't stopped, or I don't think alarms were raised.
No, I think alarms are raised.
Okay.
Depends on, what time of the day this is raised. The response by the digital financial services provider, the interplay between the banks, the telcos, and all the other players in the ecosystem. But I think by and large, the fraud that we have seen and experiencing in Nigeria is not germane to Nigeria. It's very prevalent across Africa, across Asia, perhaps even with more levels of sophistication.
Yeah, at least we don't have identity theft back here in Nigeria. Or do we have that? I haven't heard.
We do have identity
theft.
Absolutely.
Wow, that's fearful. Well, any parting words for our viewers on this issue? Maybe some tips that they could arm themselves with to prevent being defrauded?
Well, I always say that vigilance is good. Also take due care of your electronic devices, your ATM cards, have limits on your account, etc. So just a few common sense tips, but by and large, again, it boils down to capacity building of our people to address the issues.
And also, if it looks too good to be true, it's not true.
Don't touch it.
All right. Thank you so much, Mr. Akinwale Goodluck, Deputy Chief Executive Officer of African India, for your time and the tips.
Very much. Thank you very much.
All right. Let's take a break now. When we come back, we'll head to the markets to stay with us. We're waiting for Will to come in with the market numbers, but we know that yesterday the market rebounded as the NGX. It's recovered after 5 consecutive sessions, 3 sessions, negative sessions last week and 2 this week, and then we had that recovery, even though it was marginal, but at least it's a green one. And then we also had a positive market breadth at the close of trade. So Will comes in now with more details on the market.
Thanks for, giving the guests a bit of, the audience, some form of, it's green. a bit of breather for the market.
Yeah.
We closed 0.12% up yesterday. That's after 5 negative sessions.
Yeah, what a
consecutive sessions.
relief.
It's a relief for the market. You know, it's
Relief for investors.
relief for
Relief
investors.
for me. I report good news.
For the market. I think positive sentiments are beginning to return to the market, and that's what is really important to the market now. So we see 64,000 level still for the ASI, not much traction in that part, and we see the market cap still at 34 trillion naira mark, and bargain hunting on Dangote Sugar and Lafarge pushed those, drove the all share index up. Now we're seeing year to date increasing to 25.4%. That is a good one for the market. The market is still very stable at that. Year to date gains are still very strong, relatively strong in the market. Now let's look at the top trades. I mean, the total volume of transactions yesterday, we saw a decline, so sea of red, by 56.6% yesterday to 330.78 million units transacted yesterday, valued at 4.27 billion naira, and all transacted in 6,251 deals. Now, look at the sectors. We see industrial goods, consumer goods, insurance. In the green yesterday, consumer goods was really doing better since, you know, we saw those FX losses in companies that were in that sector. We saw some sell-offs, especially from Cadbury, Nestle, Unilever, you know, posting those negative earnings results. Now, for banking sector, we saw Access Holdings down yesterday. UBA was also down, despite the gains in FBN Holdings. Now, we saw insurance up yesterday. AXA Mansa did his thing there yesterday. Coronation Insurance also helped to prop that counter up. Oil and gas closed unchanged from its opening levels. That's opened on Tuesday. Now, Transcore was the most traded stock. Let's look at top trades. We saw Transcore in the lead yesterday, back to the green zone. There was a lot of buy interest for Transcore yesterday. 58.83 million of his units of his shares were traded yesterday, followed by FBN Holdings, also in the green yesterday. It was traded 27.95 million. It was also the most traded stock by value yesterday. Now, also, EcoBank Transnational Incorporated was also in the top three top trades in yesterday's transactions. 21.3 million units traded. But we're bringing it to you, Konshola Aregbashola. She's investment research analyst with ARM Securities, who's going to be giving us more insights as to what's going on in the market, investor sentiments, and what to look forward to. Good morning, Oyin Konshola. It's good to have you on the program.
Good morning. Thank you for having me.
Oyin Konshola, we're seeing market sentiments returning to positive territory now. We're seeing investors begin to buy more stocks, bargain hunting, happening in the market. But what would you say is the general sentiment? What are investors? Get into the mind of the investors and tell us what they are thinking at the moment. What direction is the market going?
All right, thank you for the question. Okay, so we've just like when the report started, we've seen that there was actually sell-offs last week, 3 days, and then into this week. And we've noted that at the end, towards the end of last month, the Monetary Policy Committee of the CBN actually raised its MPR, which is the monetary policy rate, by another additional 25 basis points to 18.75%. Although in the past we usually don't see much impact, in the equities market, but the tone at which this meeting took place, we saw that the CBN is more inclined to reduce excess liquidity in the system, and that actually changed market behavior. Basically, investors looking towards the fixed income market space. And if we know that we have like an inverse relationship there, if investors are going into the fixed income market, we see yields rising, and that would impact the equities market, would impact negative sentiment in the market. But particularly in the banking sector, we've actually seen sell-offs following the meeting or even before the meeting, due to there was a circular that was released earlier by the CBN, by the CBN. So directing banks that they are going to reduce, they're going to increase their CRR debits, if they did not meet up with the LDR requirement. That's the liquidity ratio requirement. and we know that most banks are actually not up to par in terms of the 65% regulatory mark. So that actually sends a signal to the market that there'll be like a squeeze out of system liquidity in the market, and so that's one of the reasons why we're seeing sell-offs in the banking tickers. And it could also be profit-taking activities. I mean, we know that most of these investors actually had joined in earlier in the year when the stock prices are at low levels. I mean, it would make sense for some of them to just take their profit now and exit the market while chasing higher fixed income yields in the fixed income space.
You spoke about the CBN circular to banks regarding that CRL, but I thought I was of the opinion that the CBN was going to regularize the CRL debits and it was no longer going to be arbitrary. So are you saying that that's not the case and that the CRL was the reason why we saw the sell-offs, or the regularization of CRL was going to make investors fall into the banking sector?
All right, thank you. So for the CRL normalization, it's still like a normalization basically. So it's not arbitrary in a sense of so that's actually the reason why we saw elevated liquidity in the system in the month of June. Because they were debited as they ought to. But then there's the other aspect of the banks complying with the LDR requirement, which is a minimum of 65%. I know that most banks are actually not up to par in that line, and CBN in the past, we've actually not seen that enforcement, of that regulation, in a while. So them coming back to say that we're actually going to make an enforcement of this. So that means those banks that are not at 65%, per se, would be debited 50% of the shortfall. So that's what the circular says. So they'll be debited 50% of the shortfall of their LDR requirements. That actually send signal to the market that look, I think the banks would have lower liquidity in these times, and that's one of the reasons why we're seeing the sell-offs. And of course, another thing to note, when it comes to like sell-off generally in the equities space, we've seen that the consumer goods guys and as well as the industrial goods actually took a hit from the recent FX liberalization policy, which actually impacted their finance costs. The likes of Guinness, the like of NB, you've seen what that has done to their bottom line performance. So that shock in terms of earnings surprise, also sent that negative sentiment to the equities market.
So talking about this consumer goods, you mentioned NB now. We've seen that Nigerian Brew is also saying that they're going to pass on more costs to consumers because of rising costs in the market. And so we'll see that affects investor sentiments. If that's going to make investors more bullish on the company or the stocks, or we'll see how that affects maybe trading in the future. But what's your outlook for today? Do you see the market closing positive as market sentiments are beginning to change to to become more bullish, or do you see the market reversing the loss, gains, and going back to negative territory?
All right, so we could see continued rebound in the market. Seeing that we are still in the earnings season, and there are some companies there are a lot of companies that are yet to release their results, and the case of dividend hunting activity. A lot of investors would actually want to position themselves in some tickers so that they could take advantage of dividend payments. So we could see, some bargain hunting today.
Thank you so much, Oyinkansola Aregbesola, investment research analyst with ARM Securities, for sharing your perspective on the program.
Thank you for having me.
So the unlisted equities markets also in green territory yesterday. It was very bullish, 4.27% up NSI is now at 809.70 points. Market cap jumping to 1.12 trillion naira in yesterday's transaction. So anyway, we're seeing the market really bullish for equities and the unlisted stocks.
Yeah, recovery.
So
I think that's the first positive for the week.
For the first positive, and it has jumped from 1.07 trillion to about 1.12 trillion.
Good
so
news.
It's a good one for the market.
Exactly.
So
Thank
I'm really
you so
excited.
I see it on your face. We'll see you at 1:30, Will. Well, let's head to London now, where Teniola is standing by with perhaps the story of another interest rate hike by the Bank of England. I think it will be the 14th time. Teniola, when will you guys get tired of the hike? Inflation keeps staying stubborn.
Although we did see that inflation was falling by more than expected in June to 7.9%, the Bank of England is still far from reaching its target of 2%. So we're likely to see more rate hikes in the coming months. But for today, the question on everyone's lips is whether the bank will take a similar stance as it did in June and hike the rate by 50 basis points. Market pricing currently favors forecasts of a 25 basis point hike, though taking interest rate from 5% to 5.25%. If it does go up by 50 basis points, though, it will definitely mean more pain to come for mortgage holders, with the cost of borrowing set to tick higher. By the time I speak to Will later on Bizink at 1:30, we'll definitely know what the case is for sure. So we'll have to wait and see. But we do hope that, it is coming to an end.
Well, we do hope so for all countries, including Nigeria. But we see, yesterday we had that story about UK keeping some of the EU symbols, that's for exports and goods. And now we see that they're assessing EU import plan after the issue of some delays and all of that. Could you fill us in on this?
More Brexit delays again, Inni. I mean, every week it's another story. This time it's to do with the introduction of import checks on food and plant goods coming from the EU. There's been several delays to this since 2021 when Britain left the EU. And the renewed plan was for the checks to be enforced at the end of October this year. But that's not going ahead as planned, as far as we know. The government has previously cited the COVID-19 pandemic and the war in Ukraine as reasons for delaying the checks. But now ministers are reportedly delaying the move because of fears that the extra paperwork demands for imported goods could fuel inflation in the UK.
All right, Tanya, thank you so much for giving us those updates. As you mentioned, we will be on with you at 1:30.
Thanks, Inni.
Let's go to the crypto market and see what's happening there. Doesn't look very good from the chart that I see. I see a red chart and it looks really bloody, and because you only have the greens at very minute areas right here. You see, can hardly notice them. So the gain of Bitcoin that we celebrated yesterday seems to have been eroded, 1.79% down, even though it still has the 47.8% dominance in the market. Bitcoin is finding it difficult to head back to that 30,000 that it had some weeks ago, 29,111.57, and Ethereum also in the red. We'll have Rume Ofi to join us and tell us what's driving the market. But before, let's see that there you have it in the colors that we know, minus, minus, minus everywhere. Bitcoin, Ethereum, BNB, Cardano, and XRP. Everything is reducing. I wonder what's going on. Rume, good morning. Yesterday, we were supposed to have you. Apologies, we couldn't do that. But thank God we have you today. What's happening? Yesterday would have been good news if we had talked, because Bitcoin had recovered. Now it's in the red again. Oh, wow. It seems we have lost Rume. I hope we will have him. We really need to know what's going on. Okay, so let's see the top gainers for this morning. There you have it. This XDC having this major jump, even though the price is... oh, Rume, I can hear you. Can you hear me?
Fantastic. I can hear you loud and clear.
Great. So I was asking, yesterday we had this conversation, we would have been celebrating the gain on Bitcoin, but this morning it's the flip side. We see it drop. What's happening?
I think the market actually responded very well to the MicroStrategy buying some good amount of BTC, making it about 152,000 BTC right now. And I think it's more like a renewed hope, if I use that word correctly. But it's not sustained. We should be careful. And I think because of the fact that the Fed has come to speak and is not certain if the interest rate is going to be increased subsequently, but we know that it's going to be increased. This is 11 times now the interest rate has been raised. It's going to affect crypto market and stock as well. So neither here nor there, the market is trying to see how they could be forward thinking.
And then I was thinking that it was the Fitch downgrading the US that affected the market.
Yeah, though, but I like the fact that in as much as things are not going well with the global economy, those that are actually passionate about digital transactions are actually looking forward to see that they could use cryptocurrency to do their thing. But on the flip side, I think that this industry has come to stay. It's going to be for a very long time. The best thing to do right now by government or agencies are to put regulations in place.
But a lot of people are not listening to you, Rume, because we've seen Nigeria SEC say Binance is illegal. And even in China, I mean, in 2021, they declared Binance illegal or crypto illegal. But I think some days ago, there was the data showing that they traded about $90 billion in China in spite of cryptocurrency being declared illegal in China.
Yes, Ini, I must tell you for a fact is the technology powering Bitcoin, most especially, which is the father of all of the cryptocurrencies that are now the big daddy of all of them, is so sophisticated that is so strong that nobody can bring it down. It's so powerful. It's money over internet protocols, money that resides on the internet. It's more like saying that you want to shut the global internet, which is not possible. It has properties like properties that it has this blockchain has properties of distributed ledger system, the cryptographic system. It cannot be edited, which shows immutability and a proof of work. So it is very difficult for you to ban it. So all of these qualities, all these properties, I beg your pardon, is the reason why transactions are going on. Even if you say this is illegal, you're banning exchange, but people can still do transactions as far as the internet is concerned. So that is exactly what is happening in China, and it's what's going to happen all over the world. The government should bring collaborations to bring all of these actions and say, okay, what's the way forward rather than outright ban, because you cannot actually ban crypto in its entirety.
Yeah, obviously it's a deregulated market, so it's decentralized. You cannot stop the transactions and all of that. I wonder how that will play out in Nigeria after this outright pronouncement by the Securities and Exchange Commission. Well, people like you, I don't know what it means to you, Rume.
What it means to me is that there has to be a roundtable discussion. This current administration have said they're going to use blockchain and cryptocurrency to help push our financial, our economy forward, banking infrastructure and all. So the SEC coming out now to really get hard on Binance and a couple of exchange platforms. If you ask me, I'll call it strangulation, right? So let the government come in, settle down, and see how far we could use this to better improve our economy, because we need to improve our economy at this point in time.
Then this suspension of its action by Kenya, the government of Kenya, on WorldCoin, what's that about? Is it security concerns that made them suspend it?
I love this question you just brought. Thank you very much, Ini. The WorldCoin platform is a platform that wants to bring in a situation whereby everybody can be doing transactions right together. But this is, for me, more like a national security issue. It should not be allowed here in Nigeria in case people have already been recruited. We got information that some persons are actually being recruited in Nigeria to carry out this action in Nigeria. WorldCoin, for me, is harnessing our data and our privacy, which is a no-no for me. What has happened in Kenya is that they went to Kenya to carry out their action where you use your iris to scan, and they get your data and they give you about $2. This is capitalizing on the inability of our people to be able to do some certain things for themselves, capitalize on the fact that these people are poor, and you give them certain amount of money and you harvest their data. This is not done in the US. It is not done in the US. It is done to undermine us in Africa. And I think those in charge of our security architecture in Nigeria should begin to look at ways to kick against it heavily, because it shouldn't even smell Nigeria. And I think it's something that we have our own data system here, and it should be internal with us, not someone coming in the name of cryptocurrency or a project that wants to harvest global ID.
So, Rume, please educate us a little bit more about this work. And does it come on any of the trading platforms like Binance, or how, so that people will be aware and watch out for it and be wary of, they don't fall into this this scam?
All right, so they have an app, what kind of app, where the idea is to make sure that humans are differentiated from bots, because the idea is want to create a new financial network where we could help people do easy transactions and all. So they have a device, I think it's a UBI, where you put in your eye, around the sort of, you put in your eye, it scans your iris and gets your data. There's this popular saying, the eye is the gateway to the heart. So I don't know how many of these data these guys are going to get at the end of the day. And I think that we should be very, very careful and not allow it happen. So they have more like the way you have registration of SIM here in Nigeria. These guys will go about putting some of these things in place. Then they tell you, you put in your eye, you just to put in this. The way the Nigerian thing is, this is easy, and let me just make money off it. So if it comes here, it's going to be very lucrative. So a couple of us here are saying, no, we don't want it here, so that people don't come and take our data. We don't know what they're going to use them for. So they have the app. After you've done that, they take it after they've taken your eye shot, a couple of other things. They'll link it to the app that you have, send you some coins, incentivize you with your coins, and you could cash it out some of these exchanges, right? I think it's listed in a couple of exchanges. It's even listed on Binance as well.
All right. Thank you so much for that tip, Rume Ofi, financial market analyst. I thank you for all of that.
Thank you very much, Ini.
So there you have it. Do not fall for any of that. So anybody wants to give you free money, they need your data. Your data is worth more than $2 or even $100 million. You need to keep it safe. So let's be very vigilant. As our earlier guest had said, now Rume is talking in the area of crypto. Please do not sell your data. You don't know what they want to use it for. Well, that's it on the program today. Thank you so much for being a part of Business Morning. I hope it's been informative and giving you relevant information for your decision making. I'm Ini John Mekwa. I'll see you at 10 p.m. for the stock market report. Will Ibon will be back at 1:30 for Business Incorporated. You have a great day.